Hi, this is Atmir with yet another bank holiday edition of the Bulletin Board Heroes. This time it is Sunday, May the 28th. Starting off with the FTSE 100, where it bounced near to where we were hoping that we would bounce, i.e. near the 200-day moving average, 75.20. Key reversal to the upside on Friday, which is a nice signal, and bouncing above where we think that support line is there on the daily chart from October. That was around 75.30. So the risk of another dip down towards that 7,500 zone, but at the moment looks like we've got away with it. And obviously it all depends on the debt ceiling news, which at the moment looks as though it will end in a positive, as it was always really going to. Touch wood. If you're looking for a proper signal in terms of the upside, then it would either be a break back above 76.30, which was the old April support, or the 50-day moving average at 77.03. But at the moment it looks as though the easiest thing is to assume that we have actually put in the low there after the decline from April. On to the DAX. Here we had better end to the week as well, with a 1% plus gain. Again, bouncing above the floor of the rising trend channel there from the autumn, above the 50-day moving average at 15,600, and approaching the floor of the gap down that we had there. A nice end of week close above 15,900, which was also the initial resistance for May. So that also looks as though it's a market which is ready to get back on the front foot. RSI closed above 50 as well, so that is useful. Onto the Dow, which has been really milking the negativity associated with the debt ceiling issue. Here we've obviously got a run around either side of the 200-day line. 32,700, managed to close well above it on Friday. A rising 50-day moving average, which is useful in the sense that just an end-of-day close above that at 33,200 could signal that we're going to have the umpteenth attempt at breaking the one-year resistance line there from April last year at 34,000 above that, and it should be up and away towards the top of that rising trend channel from back in the late summer. I suppose the angle there may be a bit steep, but still, that looks as though it's heading towards that area, and maybe the solving of the debt ceiling issue might be the thing that gives this market a bit of oomph in terms of heading higher. A market which has needed a bit of oomph in the recent past has been Bitcoin, and here we are looking a little better. 26,700, the old March support area. We traded either side of that, haven't gone as low as 25,000, which was the risk there at old August, February resistance. So at the moment, at least sort of 6 out of 10 in terms of the performance here. Want to see a break of that April resistance line there. That's around 27,300, and that could then give this market the chance of heading back to 30,000 plus over the course of June. At this stage, probably the best case scenario would be that we break that line of resistance from April over the next week, and then we are set up for maybe an end of June move towards 30,000 plus. But obviously that's the positive scenario. The negative scenario would be that we head back to 25,000 and then have to test the floor of the channel there near the 200-day line, as the indices have done on their charts, before we can head higher again. Onto the stocks, and one stock which I haven't covered I think for ages, if at all, has been is Alphawave. You can see that we've broken post-October neckline resistance around the £1.22 level on a weekly close basis. Above that, we're hoping for the top of a rising trend channel from back in September, as high as £1.80, and that could happen as soon as the end of next month. Obviously, they'll be pushing it, but let's go for that as an optimistic scenario. And the upside valid, certainly while we're above the 200-day line around £1.12. Stock with very aggressive and high-profile stake building of late has been Brandshield, and good to see that that's finally got the shares moving. Great move on Wednesday, follow through on Thursday, breaking the 200-day moving average, and then that's the grey line there at 6.5 pence, and then the gap higher on Friday, so it doesn't really get better than that. The initial target here, the top of the triangle there from back in October, and above that, then we can, above 7.5 pence, we're looking for greater glories, maybe by the end of next month, end of June, as high as 11.5 pence or 12 pence. Could be the destination. Key here, I think, probably holding the area around 6 pence probably is the line in the sand as far as the upside scenario or potential upside scenario is concerned. On to critical metals, which has been a bit of a holding pattern of late, basically for much of 2023, but it looks as though we bounced off had a bear trap rebound from just below the 200-day moving average at 22.5 pence. There's also the floor of that rising trend channel from October last year, and all that's left now between the bulls the barrier for the bulls getting their upside is a break of that December resistance line at 27 pence. Above that, we could head up to 42 pence over the course of perhaps by the end of July at the current rate of progress. But I think after 6 months or so of consolidation, that's probably enough for the consolidation ahead of a new move to the upside. Stock that I mentioned in this week's stock review was e-Therapeutics, a bit of a rocket science situation and also a bit of an AI situation. AI is obviously much more superior than rocket science. That was just a 20th century thing. Here we've had two gaps to the upside over the course of May, the second one unfilled, looking to break the 200-day moving average at 17 pence and head up as high as 25 pence by the end of next month. So a nice situation there, obviously, even though it's not very liquid. Stock which I haven't covered quite a while is Empire Metals, and here looking good as well in the same way that critical is, i.e. we're bouncing at or above the 200-day moving average. In this case it's at 1.6 pence, and above 1.6 we're looking for the shares to zigzag to the top of that rising trend channel from April last year as high as 3.3 pence, and hopefully we could see that by the end of July or even sooner. The extra trigger on the upside would be, or the extra triggers actually would be the RSI getting back through RSI 50 versus 44 at the moment, or breaking the 50-day moving average at 2.12. But most of us probably be satisfied that we bounced near 2023 support and above the 200-day moving average. On to Enwell, which is making progress, hence the inclusion today. Here we've broken a line of resistance from November, also broken the 50 and 200-day moving averages, are broken above that. Sort of mini V-shaped bull flag, looking for 30 pence over the next couple of weeks, perhaps even more than that. If you're a fan of the shares and looking for greater glories, then the greater glory in this case could be a move up to the line I'm just about to draw now, which is heading for 40 pence. So above 30, looking for 40 there on Enwell, and upside value while we hold above the broken resistance line from February at 21 pence. Moving on to Fox Marble, where the binary bet is getting loaded for happy holders. Rather painful retreat, I think, there from the peak that we had earlier this month, up above the 2 pence level, 2.15. Disappointing to see the shares go back below the old resistance there at 1.4 pence, but they have managed a bear trap rebound from below the 200-day moving average at 1.1 pence. This may be an opportunity now, given the fact we've had such a massive retracement for keen followers of the stock to have another roll of the dice looking for a repeat of the previous spike that we had earlier this month. On to the next contender, and it's Marula, where it looks as though after a bit of consolidation we're back in business on the upside. Here we've got a bounce off that uptrend line from December, looking for the 50 and 200-day moving averages, as the 50-day moving average should be broken around 10.6 pence, and that resistance line there from April. Above 10.6 pence, we're looking for a fresh leg to the upside, not only retesting the April peak around 15 pence, but up to 18 pence, maybe by the first half of July. Moving along to Pelatro, and here we've got an encouraging charting position. Rising trend channel from back in the start of the year. The initial target here up to 8.5 pence, best case scenario target by the end of next month up to 14 pence, which is the upper parallel of the rising trend channel, and obviously we're not expecting any weakness here now back below the 5 pence level, especially after that massive key reversal that we saw on Friday. Stock which has delivered the goods and done exactly what we hoped it would do from the start of the year is Rockfire. Very similar charting pattern there to Pelatro, so that rising trend channel off the lows with an upper an upper resistance line there, giving us the fresh target. The view here is that above 0.26 and the top of that October rising trend channel, we're looking for as high as 0.33, maybe as soon as the end of next month. And very good to see the way that the shares have broken above both the 50 and 200-day moving averages at 0.22 over the course of this week. There's quite a few stocks to go still. It was a bit of a marathon session, more marathon than maybe that I wanted to. First one is a stock which has been recovering quite nicely, Quantum Blockchain, over the recent past. Here you can see that we're in a rising trend channel from back in July last year. Top of the channel, they're heading for 2.7 pence, and we're looking for that to be hit as soon as the end of next month, especially while we hold above the 50-day moving average at 1.6 pence. A very extended and multi-tested uptrend line in the RSI window, which gives us more confidence that the shares can hit their target there near 2.7 pence. Scirocco has been a bullish situation, one of the better ones of this year so far, but slightly rocky ride after that spike that we had in April towards 0.7. Now it looks as though we're regrouping at old resistance, 0.33 above that, looking for a retest of 0.7 or even 0.8 by the end of next month. URA Holdings, I also wrote up yesterday and mentioned the Andrew Austin factor there, and here you can see that the shares gapped up during the week. We had an initial target here at 4 pence at the top of that rising trend channel from back in March last year. Best case scenario target maybe by the end of next month would be up to 5.5 pence, which is that December resistance line projection. But with the rising 50 and 200-day moving averages, the unfilled gap to the upside, and breaking previous resistance and closing right on it, it looks as though URA shares are finally on their way. Couple of stocks to go now. First one is just to put a pie in the face of the bears, which we like doing with one or two stocks in this selection. The bear killer this week has been Versarien, where we had very delicately and gingerly come in with a 4 pence target midweek. That looks like it'll be hit very easily sometime this week. And while we're above the 50-day line at 2.46, looking for 4p over the next week or so. If you're a fan of the shares and looking for greater glory, the next level up after 4 pence, if we get there, is up to as high as 7 pence by the end of next month. But obviously that would be quite an achievement. The stop loss at the moment, certainly 2.5 pence at the 50-day line on an end-of-day close basis. But with Friday's action there, it looks as though we're looking north rather than looking south. Just keep an eye on that cheeky 6 to 7 pence target, see if we can get that as a best case scenario. Finishing off with a stock which has been in the wars, but at least it had a good end to the week after the latest update. Here you can see that the shares of Wishbone just trying to push through the 2 pence level. We can get through that, then there's a chance of heading up to the 50-day line, up to 2.6 pence. 50-day line has basically been the resistance for the shares for much of the past year. That's it from me today. More updates during the week.